Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the markets. And more importantly, right now we are in the big part of the earnings season for the first quarter. And many corporations, especially on the large cap side, are showing some phenomenal results. And I just want to explain to you why we're seeing the results we're seeing, especially on margins. We're seeing record high margins in U.S. corporations, and especially on the large cap side, big name companies. The reason that's really happening is because of the weak dollar policy that the U.S. has really put in place, really probably over the last decade. It's been in a free fall, but more so in the last few years since the credit debacle that the U.S., in my opinion, government put us in. So the weak dollar policy is really set forth by the government. The weaker the dollar, the cheaper our products are for overseas buyers, consumers, and the like, and that really is driving the margins and driving our equity prices. The reason for the weak dollar policy is really so we can reinflate those asset prices. If we reinflate the asset prices, primarily the stock market, consumers feel richer and they're more apt to spend a few more dollars and it basically help the recovery in the U.S., although it's been a slow recovery. Eventually the party is over, the punch bowl's empty, everybody's had all the Kool-Aid they can drink, and eventually you're going to go back into another recessionary environment. I'm not looking for that in the next month or two, but I am certainly watching our indicators closely as we get into the third and fourth quarter this year, where I believe we're going to see more headwinds and more potential problems, especially in a recessionary concern with the U.S. economy as margins are at maximum levels. And really when we see margins at these kind of levels, historically, things start to revert to the mean, meaning you're going to see lower margins and compressions. And when that basically happens, you typically see a contraction in the overall stock market. So I would just like to alert you on that again, the punch bowl eventually will come dry and the weak dollar policy will basically end at some point in time. And if the dollar firms or starts to go up, you will definitely see margin compression and you will see earnings basically start to drop, especially on large cap companies. So realize that. Now, at any moment, the Federal Reserve, Bernanke, or the government could come out and say, you know what, we're going to start stabilizing the U.S. dollar. That would have a dramatic effect on the stock market, and those are things that we are closely looking at and monitoring every single day. And again, what is working today may not work a year from now, and again, if they change policy, that would have a dramatic impact on the stock market. Now, the one thing I will tell you, the asset that hasn't reinflated at all and continues to go down, and we've been right on this for the last 3 years, is real estate. Real estate across the board, not only in the U.S. but in other parts of the world, not all parts of the world, but primarily the U.S., has been in a free fall. We continue to see lower home prices throughout the country. Certain states like Florida, Arizona, and California still seem to be in a free fall, and I continue to see lower prices. Once those prices finally bottom, we could see a decade long of stagnation of prices. So don't expect your home to go up immediately in the next 1 or 2 years. In fact, I would expect it to go down more until it stabilizes and be basically flat to slightly up maybe over the next decade. So don't look for any high appreciation in real estate. I think real estate is going to be one of those assets like we saw 30 years ago that basically stagnated after a big run when we had our last real estate bubble until really use up all the supply and demand of real estate. So as we see inflated prices in the stock market, again, be a little cautious and make sure that you realize the party doesn't go on forever. And risk management is the most important part about money management. And having a risk management strategy and knowing when to sell is going to be extremely important going forward, especially in the third and fourth quarter in this year, which again I believe is going to be where we're really going to see some of the warning signs and the major headwinds for the U.S. stock market. This is Brian Resney. Have yourself an extremely profitable day, and do make sure you listen to my show on Sunday from 10 to noon. And as always, if you're figuring out that the person who's managing your money is not managing your money at all, they're just a so-called advisor working for a bank, Wall Street company, or insurance brokerage outfit, and all they're doing is really selling you investments and not under a fiduciary standard or a money manager capacity, call our office. We'd love to help you in a way that is prudent for you and really act in your best interest without the conflicts of Wall Street or commissions. Call us. We'd love to help you rebuild your portfolio. We're here to help you at any time. And again, have yourself an extremely profitable week and a very good Easter weekend. Thank you.